theme is Adaptive Trellis, and of course we have all of the necessary things that these are not recommendations to buy or sell, and if you feel like your portfolio's got too much risk, give us a call. But Adaptive Trellis, you know, a trellis helps good quality grapes grow. The key to investing today is to make sure you're in quality stuff and have a disciplined structure that allows the grape to grow naturally towards the sun. Okay? So if you look at the slide, we have the good trunk, start with good investments, and we think that now is the time to get out of some of the more speculative things that have done so well for us. Be prepared, as you see the umbrella, be prepared for the weather. We'll talk about this. If you really want to dive deep, go into our other webinar. We could see really big inflation numbers, but we're also seeing growth numbers. So we want to be prepared for any kind of weather. And then what's a vintner to do? We'll give you some recommendations on what to start with. So getting into what's going on with the Fed and interest rates, Jake.
Yeah, this first slide is all eyes are still on the Fed. And if we look at the Fed's job, they've got a dual mandate to keep stable prices and also full employment. And right now we're seeing inflation is being very stubborn around the 2.5% range, above the Fed's 2% target. And also the labor market has done pretty well. It's hanging in there. And so what the Fed has done more recently is paused. And looking at future expectations, we see some divergence there between what the Fed is saying that they're going to do and what the market is expecting them to do. And so the market in the green dot is expecting maybe 50 basis points of reduction in the interest rate this year and then flatlining. Whereas the Fed is also projecting maybe 50 basis points of decreases this year, but then another 50 basis points of decreases over the next 2 years. So there's a little bit of divergence there.
So the Fed and the 10-year Treasury. You see in this slide the number of times the Fed in blue has decreased interest rates, and at the same time the 10-year Treasury's gone the other direction. The market is telling you that it's expecting more inflation. It could be of other things in there, like a strong dollar, but if we had to say one thing to keep an eye on is inflation. As the economy grows and we're seeing inflationary pressures push things up. And that has led to some really lofty valuations. Jake?
Well, all the bad news has been priced into the bond market, and a lot of the good news has been priced into the equity market. And we're seeing valuations, PE multiple of the broad market, the S&P 500. They're very high right now, about 21.5 times. And that's lofty expectation. That means that consumer sentiment and investors believe that growth will be better in the future and companies will be more profitable and higher margins, higher growth. And so right now, we're seeing that in the S&P 500, really that's being led by the 10 largest companies within that index. They're about 36% of that total share of the S&P 500. And those are names like Amazon, Nvidia, Microsoft, etc. Those names are very expensive, trading around 30 times earnings.
So we get into our last slide, which is stay. And the point is, this is our recommendation to everybody. One, we have a structure, a process. It's the trellis. And that is that we look for companies that have consistently grown their dividends or their earnings, but are temporarily underpriced. That led us into chip stocks 2 years ago. So first we have a strategic process. That's the guardrails. Have your long-term allocation recommendations between stocks and bonds, but then be tactical. So now we have an opportunity to pivot into areas that are undervalued and be adaptive. In our long workshop, we talk about alternative investments, and there's some pretty attractive non-correlated investments there. And our main focus now is to make sure you're getting paid today, because we could have some pretty flat markets, so we want to get yield in your bonds and yield in your stock, and make sure it's quality yield and yield that's growing. With that, 4 minutes with FourThought. Thank you, Jake. God bless and have a great day.